So in chapter 7 of my book, Confluence Not Coincidence, I talk about trend behaviour and how to measure that trend behaviour. This is a quick video going through that Elliott Wave technology to help trade that trend behaviour. So back on the Think or Swim platform, it's a long time since I've used this actually, and the Elliott Wave Indicator Suite was the first ever trading software that my team developed, and that's nearly 10 years ago. Since then we're developing for over 7 platforms. We've got lots of different strategies, but Elliott Wave still holds true because it measures behavior of trends, even on short-term trends like this one on the Apple stock on the hourly time frame. So I'm just going to go through this just to remind you of how the Elliott Wave Indicator Suite works, how to trade it, and some of the behavioural rules that we need to do. Won't take long, dead easy. First of all, Apple, almost a double bottom here. The Wave 2 still been printed because it didn't break the origin of Wave 1. So we've had a first impulse move, we've had a pullback, and then we've had a really big impulse move with a big gap as well. Since then, we've had some profit taking pullback, a Wave 4. So the wave counts worked very well, but we're going to trade the 5th wave. This is the highest probability move. So we need to do some work on the 4th wave, and this is why I brought this over here now. So some of the subcharts that we need to do, I'm just going to go big on them a little bit. So the Elliott Wave Oscillator here, you see the Wave 4 pullback into the pullback zone. We'll talk about that in a minute. This pullback can't break the 140. It has to be between 90 and 140. That's one tick in the box. The behavior of that Wave 4 is following a normal pattern. The next one we look at is the false breakout stochastic. So this is a special stochastic. We see the yellow line on the top here in the overbought zone. That denotes a really strong bullish trend. When we pull back against there and cross over in the oversold zone, you've pulled back an elastic band that wants to return to that false breakout situation and to go long again. So again, that behavior is extremely good. So everything's working out pretty well. Now, I've got the bias depth heat map on there, and this is new since we first developed the Elliott Wave indicator. So it's a separate indicator, but it's your go, no-go gauge. And I've got it on the swing trading setting, even though we are only on the 60-minute time frame, because I'd look to probably swing this over quite a few days. And we can see the heat map's gone from all green, we've got some red and yellow in there, and now the red's starting to disappear again, and we'll see, hopefully get some more bullish momentum today. We'll start to see the green start to take over again. So that's given me some confidence that that pullback seems to be over right now. So the next bit of behavior is the pullback zone. So the wave 4's found, and it did reject quite heavily in there into the amber zone. So that represents an 80% probability it's going to go and hit this automated 5th wave target zone. Center of that target zone is around about 198.50. So we're basically looking for a move back up, up to 200 in or around. So we do have some options for entry here. Now, I want to be conservative. It depends on the gap up today, and that's the problem sometimes when you're trading intraday with stocks. But we have got a decent amount of risk to reward. So, for example, my entry around about 192.73 or about $193, with the stop around about 189.43. A few cents below that wave 4 pivot. Still gives me a risk reward to the top end of that target zone of 1.2 and 1 to 1.6 to the bottom end. So even if I gap up to around about $193 today, that would be my stop market order. Around that sort of price is what I'm looking for, with a move up to the 5th wave zone as a target. It will find resistance at this previous wave 3, so when it gets there you need to be risk free adjusting that stop. So it looks like, even if you're trading options today, again you're going to have to look at the options change, but it looks like a really good intraday move for the rest of the week on Apple. Again, I've put a regression trend channel there, and I'll make sure I'm out of that on that first candle today. We've got the 6-4 moving average high, this blue moving average, which is also what we use for entry with the Elliott Wave indicator suite. So I'm outside of both of those. I've made sure that this day yesterday, where we rejected the lows and started to move back up to close near the open, that bullish momentum does continue, and that's what we're looking for, continuance of this overall short-term trend, but also from yesterday's rejection, we'd want to see that bullish momentum to continue. So just to recap, the Elliott Wave indicator suite, all the logic does all the work for you. It counts those waves, and we're only interested in trading that 5th wave because that's the high probability move. All the other rules have been met, otherwise it wouldn't print them. Okay, we just need to do some final checks on the Elliott Wave oscillator, which is included in the suite, and also the false breakout stochastic. We've got a sensible entry strategy, and we've got fresh air to trade into to that 5th wave. We've got a good bit of risk to reward there. So that's it. Check out the links below, not just the Think or Swim, but lots of other platforms that we developed the Elliott Wave indicator suite for.